What is up, YouTube? Welcome back to Stocks by the Numbers, and today I wanted to do just a quick video here. I know it's Friday. Hope everyone had a good Friday, a good week, and I hope everyone enjoys their weekend moving forward. But wanted to give you guys a quick update here. Another video in my series of How'd I Do? Let's Review, where unlike the rest of the quote-unquote YouTube stock hobbyists out there, I actually have the guts and the balls, if you will, to go back, hold my feet to the fire, and see if I made a decent call, if we could have got a better price entry, or if I got it completely dead wrong. I know a lot of people out there might think that doing a series like this, I might just cherry pick my winners. The last video I put out in the series was about NVIDIA, admitting that I got that one completely incorrect. So, as we know, we win some, we lose some. If we're right more than we're wrong, 8 out of 10, 9 out of 10 times if possible, obviously we are going to be in a much more favorable position 6, 12 months, 3, 5 years down the road. And that's why I make these videos. So the name of the company that we're looking at now, Safe Bulkers, ticker symbol SB, listed here on the New York Stock Exchange. Company closed today $3.61, up 20 cents, almost 6% pop here on the day. Let's see what's going on. So as we see here, we're still in the middle of the range. This tiny circle right here, August 31st, that's when I made the video. Stock closed, I believe, that day at about 3.25, about 325. And obviously, we looked at the numbers. Again, to check the numbers, they do look very attractive. We're looking at a market cap of about $430 million. Company's paying us almost 6% yield to own shares of the company. The PE is only 2.5 right now. The company net income positive and has really been on a tear since the pandemic. Again, this is a shipping company out of the Mediterranean, based out of Greece, I believe. I just want to double check. Headquartered Monaco. Okay, so this company, as we see here, made a massive jump. If you go back and look at the news articles, you know, they took some of their liquidity and they rolled it into a bunch of new vessels to obviously increase the amount of shipments that they can make, and the revenue has followed suit, as we see, going from a touch below 200 million, jumping to north of 300 million, and now about 350 million as of last year, 2022. So the company's bringing in 350 million. Look at that profit margin, still almost 50%, even though it dropped a few percentage points. I mean, that is ridiculous. When other companies who start off young are, when they have heavy losses, right, and their net income negative, sometimes we still reward them if the revenue comes in, or if they're reinvesting their assets into, R&D, which is research and development. So, sometimes you give the benefit of the doubt, you give the company some time, and then eventually, if they go net income positive, just, 1 or 2%, obviously, that's when the stock will explode because the company is now profitable. So, forget about just being profitable, like a lot of younger companies have become. This company is basically taking in 50 cents of every dollar that they make. Let me tell you something, folks, that is definitely nothing to sneeze at. Stock right now, as we see, is beat on the EPS side 3 of the last 4 quarters. And again, market cap 430 million. Company made 350 million last year in revenue. Look at that PE, 2.5. I mean, as I said last time, this is a stock that I feel should be significantly higher than where it is. But did I get it right? As we see here again, August 31st, that's when I made the call. So the stock, of course, immediately pulled back a couple of cents. And then as we see, bounced up here to about the 335 level and then rejected and began to really sell off and pull back down here, as we see at the top of the screen, the O, the H, the L, the C. That is the open, the high, the low, the close. The low, as we see, was 235. So obviously, there in the short term, that took about a month after I made the call, you probably lost about 30% if you listened to me at that entry. However, again, the numbers were so attractive, I recall even saying in the video, I would take a sizable position here, in my opinion, at around 3.25. And if for some reason the stock did pull back to 275, $2.50, $2, I would definitely add to the position, lower my cost basis, and just keep accumulating shares because the numbers are just too damn attractive. And basically what we see here is over time, obviously the stock bounced off that low immediately. Well, not really immediately. It took about a couple of weeks, but basically rallied back up to that $3 level. The company comes out with earnings November 9th, and as we see, very healthy beat on the top and bottom lines here, coming in over 11% above estimates on the revenue side, 28% beat on the EPS side. Then they come out, they pay their dividend, they pull the stock back down a little bit, and as we see, it's basically just bouncing around this 20-day simple moving average. And then, of course, now we go back to when the ball dropped, as we see, January 23, and we get above that moving average and really begin to take off. And what jumps them to the top of this range here at a high of 385 is, again, another beat on the top and bottom lines, almost a 16% report above estimates on the EPS side, and of course, a 12% beat on the revenue side. Now, a couple of things going on. First of all, next earnings play coming out. As we see here, companies reporting earnings the end of this month, May 30th, looking for about 14 cents a share on the EPS side and about 62.25 million on the revenue side. Now, that is a pretty low estimate. However, they may feel that the company may run into a couple of speed bumps and bring in less revenue. Now, if we look, this is going to be for the quarter ending March of 23. So if we go back a year from now, period ending March of 22, we can see they had a miss here on the EPS side, still reported 24 cents a share though. And as we see here on the revenue side, they came in with a nice beat, bringing in about 77.75 million, coming in 5% above estimates. And now they're estimating again about 60 million. And if we go back, we have to go all the way back to March of 21, roughly 2 years ago, to see them coming in with revenues in the 60 million range. So 62.5 million 2 years ago, and now they're looking for 62.25 million. So again, the company may in fact actually run into a speed bump here with these estimates much lower than they've been for the last couple of years. You could potentially say that the company does have the ability to miss these estimates. However, in my opinion, based on the way the company has been reporting, as we see here, coming in with very, very healthy revenue numbers. Even when they missed on the EPS side, revenue was relatively healthy. As we see, we go back, the last 6-7 quarters, the company's beaten on the revenue side. So I would probably be more concerned about the EPS side than potentially the revenue side going into earnings here for this company. But more importantly, I just wanted to show you, again, this is where I made the video. As we see, it hit the high, and then it came all the way down to the low, and then it began to bounce inside of this channel, right? So we draw out our trend lines here. I basically drew from this top to that top. And then, of course, I extended it backwards. And as we see, even previously, right before I made the video, that was the mark where it bounced off of on this day and then closed above it. And then, of course, as we see here, it came down to test the support of that level and closed right below that trend line. And that's what made it continue to pull back a couple of cents there. And of course, this is a good support level here. As we see here, the candle's bouncing off. And then, of course, going from the low that it made there, about 235, I just drew my trend line across, touching that bottom candle and that bottom candle. And as we see here, the purple is basically the channel that it's been in since I made the video. So as we see, we have a pretty tight upward channel forming. But of course, more importantly, as of late, as we see here, the end of February, after these earnings came out, right as the company was paying their dividend, the stock hit a high of 385 right at the top of this trend line and rejected and pulled back. And then, of course, as we see, it ran back up to retest that 385 level. However, that formed a double top, which is technically a bear pattern, and that brought the stock down. It broke the moving average, and as we see, came all the way down to about here and has since bounced and closed at about 361, which I believe looks right about at the moving average. So it may make its way back up here to about the 380 mark and head towards this higher trend line here. However, so what I do is, right, I take this recent low that broke and draw it back to the previous low of the channel. And as we see here, the double top makes a straight trend line across, right? And then if we draw a trend line across the bottom to look at our low support levels, as we see here, we're forming a triangle. A triangle with a flat top and a rising bottom like this. This is called an ascending triangle, which is why not only did I draw the apex of the triangle here for you guys, but I also indicated here with earnings coming up right around that apex time, we have a big green arrow that, in my opinion, if the earnings come in healthily, will rise this stock up back to north of $4 here in the short term. And of course, if the numbers are healthy and they come in with a nice beat, they may continuously keep it bouncing off of this fib here at about 397, and they may keep it rising up here at the top of this channel, as we see here, low fours going into, the 14s, 420s, 430s. So that, in my opinion, I think is what's going to happen with safe bulkers. Obviously, in the short term, much more unpredictable. We do have a technical pattern here that again, is probably going to give us a nice pop here in the short term. However, I think it's really going to rally off of the earnings. And I know I've been saying that a lot recently, but at the end of the day, that's what it comes down to. If a company is missing estimates and not growing at the rate at which analysts expect, they're going to beat up the stock and bring it down and suppress it and have it hit new lows. It doesn't matter what the book value is or anything like that. If you're not growing your business, increasing your revenue, narrowing your losses, or increasing your profit margin on the profitability side, they are going to punish the stock. End of story. So again, worst case scenario, if these earnings do come out like trash and they happen to miss, they will most likely break out and at least come down to the bottom of this trend line here, as we see about 320, 325. However, again, on the upside, hoping that everything works out great, we're looking at north of a $4 stock. And again, just to go quickly back to the numbers, because obviously we look at, I look at, when I look at the statistics, I look at, annual, and of course, a lot of these numbers really didn't change. You do see some slight decreases. See here, like in the gross margin, obviously, look at how low these numbers used to be and look at how healthy they are now. So that's why even going like something like this, like 59 up to 60, like back down to 56, 57, like in my eyes, that's not a red flag. The operating margin here pulling back, 2 percentage points here, still sitting at about 50%. I mean, that these percentages, these profitability ratios are still looking extremely healthy for this stock here. You're seeing less than a 2% pullback on the EBITDA. Once again, earnings before interest, taxes, depreciation, amortization. The net margin percentage, as we saw, we looked at the numbers before, it pulled back to about 40%, but still, I mean, the company, again, you're just rocking and rolling. You can't deny some of these numbers. But even looking here on the income statement, we can see just revenue basically, again, plateaued here at about the 200 million mark and recently made the jump over 3.25, now sitting 350 million. Cost of goods has slightly increased, as we see 2020 was really the big cost year for the stock, and they still came out of that looking relatively okay. If we switch over here to the balance sheet, we can see that recently, as of last year in 2022, the assets have made a nice increase here up to about $1.25 billion. And as we see here, the liabilities that were up to north of 600 million they came down to about low 400 million. Now they're at about 470 million. However, the company still, on paper, sitting more healthily than it was several years ago. And of course, this was the one thing I wanted to show you guys. We look at the actual book value per share of the company. If they had to close their doors, sell all of their vessels, liquidate everything in their name, and then pay it out, it's worth $6.49 a share. The stock right now, $3.61. That is another reason why I'm so high on this company right now. But we switch over here to stock charts. I threw up the pivot points here on the company, and we're looking at the daily here. We can see the MACD has pulled back. However, of course, we had a nice chunk up here today, so it made its bottom. It's curling, and in my opinion, it will most likely rise going into that ascending triangle. And then when the pop happens, obviously the MACD is going to run. But look at this too. When the MACD was significantly lower here than its counterpart, you can see it curled, found the bottom, and then broke. Here, when it was lower, as you see, it curled, found the bottom, and then broke. When it was lower, it came down, found the bottom, curled, and broke. So that's why, in my opinion here, especially as of late, forget about the MACD, but more importantly, look at these support levels here, 335. That's exactly where this stock came down to, and then it immediately bounced up. And then after that, as we see here, if we go to inspect, it shows you again the O, the H, the L, the C, the open, the high, the low, the close. And as we see here, look at the O. It opened, right? It bounced off that low, 335. Look at the low, 336. And then it ran up, closed at 341. And then the next day, look at the open. It opened at 350. What is the next support level? 350, right? So that, in my opinion, is a very, very good sign. Again, as we looked on TradingView, this right here at 361 is right at about the 20-day simple moving average. And again, as we see here, the 50-day moving average here on the daily is about 364. So in my opinion, that's why it's most likely going to climb. It's going to break the 364. Then the next resistance is going to be 368, 383. And that's what I'm saying. If we come back here, right, we get above the 360. Here's 364. Here's 368. The next real fib rejection should come at about 375. And then the top of the range, as I said, about 383. This line right here was 385, but again, we have a fib level at 382, and we have the resistance there at 383. So, in my opinion, that's where it's going to get. So, basically, long story short, I mean, I guess in the short term, you could say I obviously ran the ad. I obviously got it wrong because it had a big pullback, sell down into the low twos. After I personally would have bought at 3.25, but again, it's like I always say, we have to take what the market gives us, and if we begin to piece our way into a stock like this at 3.25, and then they pull it back to 260, 240, 215, it doesn't matter, because if we liked it at 3.25, we're going to love it at 2.5, 2.25, $2. So if anyone did step in when I gave my opinion initially, obviously I apologize for the immediate short-term volatility. However, if you were wise enough to, really listen to what I was saying in the video and you added to the position down in the twos, now your cost basis is probably around 3 or the low threes, and, you're sitting pretty here, perhaps up almost about 20% with dividends that you were collecting. And even with my call at 325 being a little bit early and then rejecting off that trend line and giving us a more attractive price, you're still up roughly 10% with dividends being paid the whole time. So in a volatile, uncertain market that's swinging, 500 points a day on BS news, we have large corporations like Meta, Amazon, Disney, who was the other one? Morgan Stanley, I think, just came out and said they're laying off thousands of people, right? It's really hilarious how it happens because all of these big companies that hire the most employees are consistently laying off thousands of people in this uncertain time. And then you get some bullshit headline like today where jobs numbers came in above estimates and the market bounces off these 33,000 Dow lows and pops up 500 points. I mean, we can see the writing on the wall. It's getting rough economically out here for the country and, of course, for the entire world. You wake up on Monday, 3 banks are failing, and then Wednesday they all rebound 25% and everything's fine. It was just a slight hiccup. Like George Carlin said, it's all bullshit. It's all bullshit and it's bad for you. Trust the numbers. That's what I always say. Look at the numbers. A company like this, Safe Bulkers, I think, in my opinion, is worth your time, energy, and attention. But I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Like the video, thumbs up, helps out the algorithm, helps me get more eyes on the channel. Subscribe to the channel if you appreciate the videos I'm putting out. That's our handshake deal. You push the subscribe button, I continue to make videos. That's all I ask you guys to do. But moving forward, like I always say, I understand that markets are rocky, and they're volatile, and they're uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good weekend, guys.